Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to review some ideas around IBM's earnings. Now, the report is already out, but this, of course, is a trade that we put on prior to the announcement. I've been talking about it in the chat room for some time, so let's look at two aspects of this that I think are important to cover, and some other topics that we'll be covering as we get into tomorrow night's free webinar. When you come back and you're looking at this chart of IBM, and I really like inside Thinkorswim the ability to just hide your studies because you can very quickly flip down and just look at clean price action. And when I look at this chart, there's a couple of things that I see. The first of which is that we've had a major swing low from 116, 117 up here into 183. And that's a big move for the stock. It's a big move percentage-wise. However you want to chart it up, it's a significant swing. The larger the swing, the more importance I will tend to give major retracements. So if we look at this major swing low to swing high, did it pierce down through and trade below the 618? Yes, and that's a fair argument. But I look at this as being a very serious area where if IBM can hold these most recent lows, well then it's going to come down and have the potential to take out the 116 low. Since I didn't think that that was what's going to happen, I'm looking for a rough area of support here around the major 618 retracement. So that's one piece of this idea. Of course, you can drop down into the daily chart and make that idea more progressive and work it down into your smaller time frames. But then what we started looking at based off the idea that, okay, maybe the weekly chart is holding support. Then, as I was heading into the close, I thought this was very interesting, and it's something that you'll hear, various reviews about. But I started this idea in IBM right here about 30 minutes before the cash markets closed. You can see that first order went in 29 minutes after the hour, and I was trying to buy the butterfly for a 25-cent credit. I let that work for a few minutes, and it refuses to fill me. I come in and try to buy it at a smaller credit. Still can't get filled. So you progress along the way, and then you can see this is kind of the interesting part of this, because then I said, okay, if they're not going to fill me, and the idea is that if they're not filling you on something like a position like this that involves a majority of short puts, well then the stock is going to go higher is the general idea. So I say, okay, if I can't get my 25 or my 20 cents, then I'll drop it down to a 5-cent credit, which is the smallest credit that I will take on this, because then that allows me to still make money if we move higher. Remember, at a 0-cent transaction, you're still losing money because of the cost, the transaction costs, your commissions. So by doing it for the 5-cent credit, that truly gives me no risk to the upside. Okay, so they're finally willing to fill me at those prices. Then as soon as I get that order filled, I put out another at 15, take it at actually the 17-cent credit, and then we head into the close. So it looks a little different, of course, through the order execution, but you can see what happened is that I'm trying to come in and get long the stock, basically. Even in the last 30 minutes, as you looked at how this traded, it's not like the stock was going straight up. So the inability to get filled on those gave me a little bit more of a bullish tone on them, and it's just one more situation where with this pop higher, I will have no risk to the upside. Should the stock trade back down a little bit, I'll actually be able to initiate it at a credit and then sell it at a credit on the way back out. And this is something that I have found to be very effective not only in Netflix, which we discussed prior to the report, but now here in IBM, and I will continue to use this strategy as we work through earnings. Anytime you're looking at these wicks and you're saying, okay, where are we actually trading at? Just remember that enabling your time and sales will very quickly clear that up for you. And we can see that we are in fact up here at 152.75. So with no risk to the upside, that's a very, I think, great way of playing these and a good way of working through earnings. If that's interesting to you and you'd like to learn more about that, John will be doing a free webinar tomorrow. This is going to be on Wednesday, the 18th. So at 7 p.m. Central, if you'd like to check out these strategies along with several others and kind of how John enjoys his approach into earnings, we'll look at some of how I approach earnings, and I think we'll have a little bit to do with Bruce if you actually take the course on Saturday. So that's what we've been working on. I think it's very helpful as you approach earnings, and I hope to see you there tomorrow.